Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries of corporate filings. Today we are diving into a Schedule 14A filing and specifically a proxy statement of BWX Technologies. It sounds like some sort of alien tech company, doesn't it? Well, turns out it might be more down to earth than we think, but the details within this report are going to be interesting. What's the story? BWX Technologies is getting ready for its annual meeting of stockholders in May, and this proxy statement lays out all the details about what's going to be voted on. Think of it as a cheat sheet for investors. What are some highlights? The filing says that they want to elect directors, get an advisory vote on executive pay, and limit liability of their officers. Let's kick things off with who's running the show. The board of directors is really important for any corporation. They are like the guardians of the company's mission to look after the stockholders through overseeing management. So to make sure the leadership is legit, they have a bunch of rules about who can be on the board. Let's look at director independence. In general, the board has decided that 9 of 10 current directors are independent under the rules. The rules help determine if these board members can act without any kind of bias. Who's in charge? Well, there's Jan Birch, who's the independent board chair. Then there is Rex Jevedon, who is president and chief executive officer. So there is split of powers, which is something that investors like to see. But wait, there's a catch. BWXT has a 12-year director tenure policy, meaning that after serving for 12 years, directors are expected to step down. It's like a revolving door to keep fresh perspectives coming in. In addition, the filing mentions that the board values majority voting with director resignation policy. All of this gives power to the shareholders to decide who they want on the board and not to be locked in with people who can't drive value anymore. Now let's move on to some interesting part, the main items on the agenda. The shareholders will vote to elect 9 directors to serve a 1-year term. In addition, shareholders will vote on the compensation of the executives, amendment to the restated certificate of incorporation to limit the liability of officers, and the ratification of Deloitte. What has the board been up to recently? It seems like stockholder engagement has been a priority. They actually talked to stockholders holding over 58% of outstanding shares to discuss governance, compensation, and management matters. 9% actually requested meetings. This shows how the leadership values shareholder opinions. It's time for the profiles of the nominees for election. They all seem to have backgrounds in military or the government. For example, there is Jan A. Birch. She has experience as Chief Financial Officer of Owens, Illinois. Then there is Kenneth Krieg. He was the Under-Secretary of Defense for Acquisition. The list goes on, but it seems like the main point is a strong suit in manufacturing and government operations. Moving on, there will be an advisory vote on the compensation of the executive officers. The report states that, in the previous year, 99% of the votes cast were in favor of the executive compensation. In general, the proxy report hints that the leadership believes that their ability to pay these individuals competitively will drive shareholder value without encouraging them to take excessive risks. There will also be a vote on a change that will amend the restated certificate of incorporation. This change has to do with limiting the liability of officers as permitted by Delaware law. In general, the board believes that aligning the protections available to our officers with those that have long been afforded to directors would empower the officers to exercise their business judgment. Of course, there is the appointment of Deloitte as the independent registered public accounting firm. The audit fee that they paid Deloitte was $3,174,824, which is the largest fee category that they pay Deloitte. It seems like the audit services are way more expensive than tax or other services. Now let's move into some financials. It seems like a few key numbers for 2024 include consolidated revenue of $2.7 billion. The company also states that, during the period, net income was $282.3 million, and adjusted earnings were $498.7 million. As of December 31, 2024, the company also has a total backlog of $4.8 billion. In addition to all that, the document has appendixes to show you exactly where the numbers come from. Looking at compensation, how are these executives compensated? There is base salary, annual incentives, and long-term incentives. These are like the ingredients to incentivize the right behaviors. You need salary to keep good people. It has annual bonuses so that they perform well in a specific year. Finally, long-term so that they keep an eye on the future. The filing highlights that 60% of their long-term awards are based on performance. In general, for annual bonuses, management is assessed on operating income, free cash flow, and safety. This is important because this is a dangerous industry, so they want to avoid cutting corners on safety just to pump out a few extra products. What are the results of this performance? In 2024, according to the filing, Rex Jeviden had 72,283 in earned shares versus Rob Masters, who had around 14,000. Kevin McCoy had around 7,000 and Ronald Whitford only had around 3,000. This is important because they try to tie in the rewards of the company's stock to their compensation to make it aligned with the value they are trying to generate. There are also stock ownership guidelines. What's that? It's like a rule book saying how much stock the leaders should own in the company. This makes sure they are invested in the company's future. In general, they are required to retain shares equivalent to 5 times the annual cash retainer pursuant to our stock ownership requirements. What are the major shareholders? According to the filing, BlackRock Inc. has beneficial ownership of 9,453,104 shares, which corresponds to 10.3%. The Vanguard Group holds 10.1%. So overall, based on this proxy filing, it appears that BWXT is committed to corporate governance and aligning executive compensation with company performance and shareholder value. They appear to value safety, which is really important for high-risk industries. However, it's always good to keep a close eye on how these numbers translate into real-world results. It's all a balancing act, and time will tell if BWXT's approach truly delivers long-term success. They are also exposed to government and military spending, meaning that any policy changes by the government can drastically affect how they perform. That's it for today's episode. If you enjoyed, please subscribe, like, and comment.